Do you ever notice how the market loves to make everyone feel smart right before it teaches them a lesson? Well, this is exactly where we are right now. Friday afternoon, Powell speaks at Jackson Hole. Market explodes higher. Everyone is celebrating like it's Christmas morning. September rate cuts are back on the table, they scream. But here's what nobody's talking about. Well, I'll tell you about that in a sec. But first, if you've been here before, welcome back. If you're new, I'm Annie. This is Trade Travel Chill, and here's something you should know about me. I've been in crypto since 2016, back when people thought Bitcoin was funny internet money, but I decided to become an expert in crypto wealth creation because, well, basically, my daughter has zero interest in any of this, which means I need to leave her a really, really big inheritance. And after 9 years of watching these markets breathe, I know something about Friday that everyone missed. But first, can we talk about ETH for a second? Because while everyone was obsessing over Powell's words, Ethereum just quietly smashed through to a brand new all-time high finally. Now, see, there's these things called market makers, and if you know about them, then you know that Friday is where they set the trap for the weekend traders to jam them into a position whilst they go off to party on their expensive yachts. And so here's what we're going to be diving into in today's video. We're going to dissect Bitcoin's price action from high time frame down. We'll figure out where ETH goes from here now that it's broken into uncharted territory. And we're going to have a look at the dominance shifts, the total market cap moves, and most importantly, we are going to investigate whether Friday's euphoria was genuine sentiment and a shift in the market, or was it the most beautiful trap we've seen all month? Because right now, Bitcoin is painting something on the charts that could change everything this week. So you have one job to do whilst I do the rest, and that is smash a like button and hit subscribe if you're not already subscribed, and let's go. We're going to talk about Bitcoin on the high time frame first. And what I really want to focus on right now is this M formation right here. Some may call it a double top. In the TBD system, we call this an M formation. Now, this should typically be bearish. It should mean that price is going to break down and create 3 levels of drop. But I want to explain to you why this M formation has the potential right now to actually be very bullish. When we're counting levels, we need to zoom out to our last peak formation. So that would be the peak formation low that was right here when Bitcoin dropped to 75.5K. Following that, Bitcoin rose up to about 111K, and all of that on the daily time frame would be counted as a rise level 1, which then went into this consolidation, and now we're in a consolidation after the rise level 2. So if you were to follow the levels just as the levels are, you would be expecting one more rise. And so that puts you in the mindset that the bull market is not over. However, when you see a bearish pattern like a double top, you then have to start looking for evidence of whether or not that's actually going to play out to a third level or not. And here's the thing that is bullish, even though this is an M formation, which is bearish. And what that is that when an M formation forms, you have the center peak, right? And this also applies to a W formation at the bottom of a trend, but you have the center peak that forms. And then after the center peak is formed, it comes up to create the second side. Now, if this was going to be bearish, you would then expect that the right side of the M would break through the 50 EMA with high volume and create a lower low. What makes this potentially bullish right now is the fact that, number one, the right side did not break the 50 EMA with a high volume red vector candle. What's even more important than that is that at this point in time, the right side of the M is equal to the center peak. Now that is typically bullish, even though it's an M formation. And it's bullish because it's between the levels. If this was to form at a rise level 3, I would say it's going to eventually break down and it would be bearish. The fact that it's formed only after a rise level 2, according to my count, is what keeps me cautious that even though I see the M, we may still be bullish. So therefore, I just need to set my my invalidations. And I'll tell you what I don't like currently and what I'm looking out for that makes me cautious. Number one, yes, we bounced off and we broke back through the 50 EMA with a blue vector. A blue vector is not super high volume. It would have been more impressive if that was a green vector on the daily time frame, but nevertheless, it was a spike in volume. Now, when we create that vector, what happens when price retraces is that we want to see how far the price retraces within that candle. So we're looking at the bottom, the middle, and the top of the candle. And this yellow line is the middle of the candle that I've marked out. So that's at $114,530. And at this point in time, that's where the price is currently holding, but we're not really seeing buyers step in. I have sort of two scenarios that would keep me open to the range low being in, but I am to be very clear, I am also very open to further downside. But this is where it would invalidate whether or not we're going to get further downside. Number one is that we hold 114,500 kind of area, and I'll be looking to smaller time frames to see the likelihood of that. I will do that with you in this video in a second. The second scenario would be that we come down close to another touch to the bottom of the trend line. That might be a stop hunt because we do have high level long orders sitting here currently between 110 and 112K. I'll show you those here. Let's see if they're still here. So these are the high level buy orders here that are sitting at the bottom of that range. So you can see there's 110K and then it's down to 108. This has changed because there was orders at 112. So they're gone now. So 110 to 108 is actually the range. Let me change this. Now, in addition to those long orders down there, which they're not super high, I just want to be clear about that. They're not the kind of numbers that I would expect to cause an actual trend reversal, but they may grow over time if we do break the daily range low. But we have this really large area of liquidity between 103,500 to 107,500. Now, does that mean we're coming down to 103? We have to be open to it. Number one, if we don't hold the 50% daily vector. And then number two, if we don't hold the daily range low. I'm not so certain we'll come all the way down to 103. I don't think we'll wipe out this entire range of liquidity because the highest amount is this smaller one here, and that's between 106 to 107.5. So if we do break the daily range low, that's going to be my next target to see if we come and take out that liquidity as opposed to looking all the way down to 103. So that's the downside risk, right? And the upside is that we hold here, considering we do have that vector and the M formation didn't give us the true criteria that we like for the M formation. So this allows us to be cautiously bullish, but still open to more downside when we're looking at the higher timeframes. Basically, you have a neutral stance right now. So then when we go down to lower timeframes, we want to look for evidence of a potential trend change. And this is where you can see the Friday pump essentially. And again, if you know the TBD system, then you know that Friday is where the trap move is set to trap traders into the weekend price action where it basically goes nowhere and you're left trapped into open trades. But again, on the 4-hour time frame, you can see at the point of filming this video, it's trying to hold that 50% range. Now, by the time I actually finish edit and get this video out, it may have broken. So just keep an eye on that 114,500 kind of area and see if it holds or not. Going further down to the 1-hour time frame, this is where the trap kind of becomes clear. Now, if you've been following along with my videos, you'll know that all week I was saying to you that I was expecting a pivot sometime this week. And I knew we had lots of news events coming up and it could have been any one of them that did it. Turns out it ended up being Jackson Hole that did it. The problem with that is Jackson Hole happened on a Friday. I understand that Friday is where the trap is set. Now we need in the new week to see proof of this move, which comes with a higher low and then a further rise into a rise level 2 on the 1-hour time frame. That will then show us that this wasn't a Friday fake out and in fact it is a change in trend. So originally all week my target was somewhere between 110 to 112. We had a very big liquidation level that was sitting at, it was right at about 111,900 at the time. And you can see here that on the UK close, in this method, we call this the UK extension. It happens in the last hour of the UK session. They spiked the low to take that liquidity. And that was where we kind of got a bit excited in the TTC Discord because we know what a move like that means. Where most people call it chop, it's where we act. And so once we saw that liquidity taken, it was a pretty big sign to us that the trend was going to change. And that actually happened prior to Powell's speech. It was a really good scalp. So you had to see it on the 5-minute time frame. So this right here spiked to the low to take the liquidity, moved out at the end of the UK session, came back to create a higher low at the start of US session. And that was your entry signal if you understand the TBD system. And then Powell spoke and then it moved out. So we were already in the trade before the move, which is really what you want to be. You don't want to be chasing green candles. But at this point in time, we did treat that as a scalp trade because we know that it's Friday, we know there's a trap, and we know that it can potentially all get taken back this week. So now all we're really waiting for is evidence of whether or not it's going to get taken back this week. So the Sunday rule is to mark the weekend price action, mark a box around it, and see if you can identify where the trap traders are currently. Right now, I filmed this early, so usually you don't see a false move until a little bit later on, but I try to film this video early to give you an idea of what to look out for so that when the trap happens, which is usually a stop hunt, similar to this move that I explained to you earlier, but when you see something like that, you know how to act. So I'm not here at the right time to give you the actual trigger to enter. So all I can do is tell you what to look for in advance. One thing I do want to note is that currently closest to the current price, there are a cluster of long orders here. So let's have a look at those. That's these orders here. And the highest orders are about 114,200, but they do go all the way down to 113,750. So if we look at the highest orders that are at 114,200, I'm not saying to bank on this because right now we do have a double bottom right here, which after a level 1 rise, when you have the retracement, if you get a W formation within the consolidation, that could be your hint that we're going to break out from here. So if we hold this level, we may break out to the upside as the market opens this week. However, if there is another stop hunt still to come, have a look around that 114,200 area, see if it spikes into that area. And if you see a strong hammer, you see buyers turn up around there, that could be your hint that that was the false move. Now, we also want to have a look at the current liquidity because it helps us to identify whether or not there's a reason to go down there. And so here you can see there's very high level liquidity here and here. So if we did spike down around that, let's just say 114,200, it would take out this liquidity. If you saw a strong hammer, then that might be your hint that's the false move, and then we may break out to the upside. The other thing to note is that we would now have a CME gap to the upside. I don't tend to look at the CME gap specifically. I look at what we call the US settle, and that's basically the last candle of the US session close on Friday. So for us, that's 117K to 116.8K. So that's a good sign. Like if they're going to come up to fill that gap, then that would be bullish, right? So if we're following the model as the model is, and this turns out to be a rise one, and this is a retracement, then as long as the retracement gives us a higher low, whether that is here or somewhere within these long orders, that would be a signal to go long to me, somewhere back up to around the settle. But we may even go beyond that. As I told you, if we end up completing the full set of 3 rises, we might end up around 120K, which I spoke about on a prior video, that if Bitcoin can get back to 120K, then we need to be looking for lower highs in that area, as that's where we may need to flip bearish for the time being. So at what point would I turn bearish on this would be if we came down and took out this liquidity and we could not reclaim the price. So if we started to create lower highs and lower lows after taking out this liquidity, then it's more likely that that was a fake move and we are coming down and we need to start preparing for even lower prices. Now, before we dive into the dominances and the total market cap, this is actually perfect timing as I need to tell you about something that could make your trades a lot more profitable. Look, whether we're heading to 120K or back down to test that lower liquidity, one thing's for sure, you're going to want lower fees and better tools when these moves happen. Crypto exchange Pionex have put together something pretty solid for our community. If if you're not already a VIP over there, they're offering a VIP trial plus up to $1,299 in trading bonuses when you make a deposit and make your first trade. And here's the thing, when Bitcoin starts making these big moves that we're anticipating, having VIP level fees can literally be the difference between a good trade and a great one. I'll drop the link below this video if you want to check it out. Just make sure you follow all the instructions listed to activate the bonus, because this bonus is exclusive to Trade Travel Chill audience. So when we have a look at the Bitcoin dominance, it does currently look like it's in a bit of a free fall. We can see that we've got a lower high here, another one here, and we've now broken below two trend lines. So we initially broke this one here, which was an inner trend line, and we have currently broken this long-term trend line, which goes all the way back to literally the bear market bottom down here of November 2022. But we're heading towards an EQ level at around the 56% range, which is right here, where it's previously acted as resistance and support many times. But also we're heading to the 800 EMA. So anywhere between the 800 and this level is where we may see Bitcoin dominance have a small time frame potential bounce to the upside. And that may be where Bitcoin comes back into action for a little bit, takes over just short term. And if that were to happen, that's where we would again be looking for yet another lower high. If we got that lower high, then the shift may go back into altcoins from there. So here's the thing that usually happens with Bitcoin once Ethereum breaks an all-time high. When Ethereum breaks its all-time high, there's usually a shift back into Bitcoin temporarily, and then it kind of plays tag team between Bitcoin and ETH for a little while. So that's what I'm looking for now. It may not happen immediately. It may not happen where it is right now. Like I said, 800 EMA, 56% kind of level. You know, if we continue to drop for a bit, it doesn't really matter to me how much it drops. I'm just really waiting to see if we do eventually get that temporary shift back into Bitcoin, which I think then would be probably the last chance to load up on alts. Not that I'm a spot holder of many alts. Really, I've been offloading everything that is rubbish, to be quite honest with you, because I rather futures trade in this late stage of the cycle. And so I have a lot of futures positions, but if I got a play like this, where we had the final kind of flush out, then we came up for a little bit of a recovery, and then I found a lower high, that's probably where I would look to open a lot more futures positions and ride them till the end, essentially, or close to the end, if hopefully we pick that right? No. But that's what I'm really kind of looking out for with the dominance. And the USDT, or I shouldn't say that, this is actually stablecoin dominance. This is the play that I was looking for. Now, the problem that we have right now is that we've created a higher low currently, and we've reclaimed this support that I wanted to see it break. So that's not good, but at the same time, we have a lower high here. So hopefully we get another lower high, maybe a rejection of the 50 EMA, and then maybe this part of that pattern is still yet to play out, because so far the rest has happened. So yeah, I'm literally looking for this sort of a lower high around the 50 EMA on this, and then hoping that it breaks down finally and continues down from there. Now, this is the total to minus stables, and that has come up to a prior resistance at 1.46 trillion, but the trend is pretty good on it. You know, this all here looks like a rise level 1. This is a retracement, rise 2, retracement, rise 3, potential M formation. So maybe we'll have a little bit of a correction in alts. Again, like I said, if the dominance shifts back to Bitcoin temporarily, and that causes alts to have, you know, a bit of a sell-off, I do think that would be a good opportunity at this point in time, providing we then get the shift back. But there's plenty of time for that. And if it actually turns out to happen, we can talk about it then. But essentially what we'd be looking for is maybe a daily time frame 200 EMA target. You know, if we have a little bit of a move down, little bit of a correction in alts, you know, it doesn't have to be a scary correction, but something just to reset the market before we really take off. I think that would actually be ideal, to be honest with you. All right, now let's take a look at ETH BTC, because it has played out its levels as we were still waiting for the last time I talked about ETH BTC. So we had our rise, we had our retracement, we had our level 2, we had our retracement, and we were in the process of creating the level 3. So I would say that level 3 has happened now. So this is 1, 2, 3 hits to the high within level 3, which makes it a level 3 essentially. So I would say that that's happened. Now I just want to check where that actually went to. We can see that it came up to a prior resistance, prior support as well. So it came up to a pretty key level. So that's pretty interesting for ETH BTC. The key now is going to see if we have a little bit of a correction. Again, like I said, if we have a correction here after ETH creating a new all-time high, it may just be that dominance is shifting back into Bitcoin temporarily while the altcoin market resets, whilst we get new entries, and then we can take off again. So I'm really not all that worried about it. So now that I understand where ETH BTC is, then I want to have a look at ETH USDT. And these were prior sell orders that were sitting there as this move up, actually. So the 48.90 was where we had the rejection. So actually, I'll show you on a smaller time frame. So it was right here. So we had the Friday move to the upside. There were short orders here at 48.90, and that's where we had the sell-off in the end, and we've just been basically weekend consolidating ever since. So we do the exact same process, and we draw our weekend box around the weekend price action. And now we're trying to see if we can identify where the trapped traders are. So for me, the trapped traders happen in Friday on US. It's not normal. Normally you can see them throughout the weekend, but I do think they happen Friday in US because the price went higher than where the weekend trap is right now. So it could be that there are shorts up there. It could be late longs up there. People both sides will be trapped. And I'm talking about this peak formation right here. It's exactly the same with Bitcoin. So if we do in fact move to the upside, because I've noticed that the sentiment is still quite bearish a little bit on X. So maybe people think that, yeah, Friday was a false move and we're still going to come down, and look, that may turn out to be true. But all I'm really waiting to see is proof that this move is real, which happens one of two ways. We have a retracement that creates a higher low, or we have a consolidation, which is what we have now. And then usually that's followed by a stop hunt that starts the week and we move out to the upside. So we can sometimes get a bit of a hint of that by understanding where buyers are currently waiting, like really large order buyers. So let's go back and have a look at that here, but we're going to have a look for ETH. So this was the Friday move here, and this is the weekend consolidation. I'm not really seeing super large orders. 45.87 is significant and 4,700 is significant below price. Above price, we've got sells waiting at 4,900, but significant sells waiting at 5,000. Now, they were also there on Friday as well, but we didn't make it up that high. So you can see here, this white line goes until Friday. So they've been waiting there all weekend, essentially. So there may be strong resistance if we can get up to 5,000. However, one thing to be careful of is that because that's a round number, to me, that signals fake order. And what that might mean is that if this consolidation breaks out to the upside, we have the chance of it breaking out as a trade that is known as a straightaway trade in the TBD system. It's essentially a very fast move that if you didn't get in during the consolidation, you don't have time to get in. So it's one of the trade setups that we do teach inside of TTC. If you're interested in learning how to trade this method in full, we do have full memberships that give you access to all of our courses, our Discord community, daily updates, live sessions, all that sort of stuff. Our website is in the description of this video, so feel free to check that out. But if you are a part of the private community, then you will know full well what a straightaway trade is. And look, to me, ideally, I'd love to see a stop hunt to the low that opens the week and then shoots straight up. And if we start getting close to those 5K, I would be watching this very closely. This is a website called Kiyotaka.ai, and you can watch these orders closely. And if they disappear when the price is very close, like say 49.95 or something like that, then you'll know they were fake and that they were put there on purpose to get more retail traders to short. So I wouldn't be shorting at 5,000 based off this, because the fact that they've been waiting there for so long usually is a trap. But we still have to be aware that they are there. And you definitely, when you see big orders like that, you don't take a short position in line with them. You treat them more as target zones for your position in the opposite direction. So for me, for ETH, if it's going to prove itself, then I would personally like to see a stop hunt to the downside, just because they're easy false move week beginning trades. When you see the false move happen with a stop hunt, you know exactly what is happening. But when it happens other ways, it can be a little bit tricky. We also should have a look at the liquidity to see the likelihood of that. And according to this, it's telling me that there's a lot of long liquidity, but it's quite well and truly below price. It's happened in this fast move here. So this would be people FOMOing in on this candle, and all of this is their liquidation levels as they were buying up through this green candle. We haven't come close to them, and we do have a ton of liquidity above price up to that 5K region. But look, the market maker usually goes for the lowest hanging fruit, the liquidity that is closest to the current price. And when you have a look at this, the closest liquidity is above price. And I also then want to just have a look at a higher time frame heat map for Ethereum, because I'm just a little bit curious. So below price, our range is 45.50 to, let's say, 4,600. There's a range there, so it's potential to get a stop hunt into that zone, but it is a little bit low. And then above price, we have two clusters. The major cluster is 48.85 to about 49.09. But to me, it looks like there's more liquidity up, look, all the way up here to 51.60. The moral of the story is that people longed at the right point. If you have a look at this, so this is the highest level of liquidity on Ethereum below price. And this was the bottom before the breakout. So these are smart traders. It's annoying when we have smart traders, because if everyone gets it right, then we have to have a major dump to wipe out that liquidity before we move to the upside. The dumb traders are better, but we don't have them around right now, maybe because of channels like this. But you can see here, see how this is bright yellow? This was dumb traders, because this was traders shorting very late. They were shorting here on Thursday, Friday, prior to Jackson Hole, and they created a ton of liquidity in this zone. If you've been looking at the ETH price on a smaller time frame, let's go and have a look at the whole week for ETH. Since Monday, the M formation formed here, and we were dropping all week. But even if you zoom out further than that, the actual peak formation was on the 14th of August. So we've been dropping for nearly 2 weeks. And that is when people decided to go short. And therefore, they open up this big pool of liquidity. And then that's when you see a fast move, because the fast move is the way to stop them out and liquidate them before they have a chance to close their bad trades. So that's what would have happened right here. And so this is why we pay attention to liquidity. We're trying to get an idea of what's going on now. So we don't have a ton of liquidity, and it will probably come during the week. But we do have this down here, which seems very far from price, would be a big effort for market maker to come there. This is significant as well, between, like I said, 45.50 and 45.90. It's possible we come there for a retest, but we also have higher as well, which is holding the current weekend low. But there's higher liquidity above price in a wider range that would be easier for the market maker to take. So that is everyone who then shorted Friday's peak formation high. So I personally would like to see them taken, is the moral of the story. I would like to see them taken. Now, one thing I want to let you guys know about is that prior to this move happening, I did set up some new bots on Pionex, and I set up some short-term bots. So this one here is a Bitcoin weekly range. Now this is set all the way down to 106. So if we do have that further move to the downside, I'm prepared for it with this bot, and it will continue buying as it does that final liquidation hunt. And then hopefully we move back up to the top of the range. And I also set up an ETH one as well at 3,700, because that's where ETH's major liquidity was as well. But these two bots are doing really well. And there's one other thing that I wanted to let you know about with these Pionex bots. I also set up some Coin M bots. So if you are copying my bots, you will notice that they're named, but if you see one that says Coin M at the end, what that means is that they require you to use the asset as margin. So this one here is a Solana Coin M bot. So you would have to buy Solana spot or own it already spot, move it into Pionex, and then you would be able to copy this bot. The same goes for Bitcoin. The Bitcoin one is currently doing the buys. So overall it's down right now, but I have no doubt that it will be up eventually. And so you would need to transfer Bitcoin in or buy Bitcoin spot before being able to use this bot. And I also set up one for ETH as well. So again, you would need to have ETH, put it into Pionex, and then you'd be able to copy this bot. If you are wanting to copy any of my bots, all you need to do is go to the description of my video, and you'll see here a title that says copy my bots. It gives you the links to all of my bots, as well as access to my Discord, where you can stay updated when I make changes. However, in order to get that Discord access, you do need to join Pionex using my link. And in addition to that, if you need to learn how to use bots, we've put together a 100% free course for you as well. Again, that link is in the description of the video, and all you need to do is join Pionex, fund your account with $250, which is your money to use on bots. It's not a cost of doing the course, and this will take you through everything you need to know about using GridBots, as well as show you how to copy mine and how to do it all the right way. So check that out if you're wanting to get access. If you know how to use GridBots and you just want to copy my bots, you can also see that in the description of the video. Now, look, I know the noise out there is deafening. Everyone's got an opinion, everyone's got a prediction, but here's what I know after almost 9 years in this space. The market, it doesn't care about your emotions. It doesn't care about hope or fear or what you want to happen. It only responds to one thing, which is preparation. And well, hopefully after this video, you are now prepared. You know about that information on the daily time frame. You understand why that 50% vector level matters. You're watching that 120K if we do bounce to the upside, but you're not panicking about the liquidity sitting below the current price either. Either way, both are opportunity. So if this video has helped you navigate the market a little bit better, be sure to leave me a comment down below and let me know. Most people are out here just reacting to the waves, but you are out here and you're learning to read the tide. So this week, while everyone else is guessing, you'll be able to move with intention, because that's what separates the builders from the gamblers. The charts will always speak to you. All you need to do is listen. So I'll see you on the other side of whatever this week brings us.